Joining us on Market Guru, Ravi Dharamshi, CIO at ValueQuest Investment Advisors. Ravi, thanks so much for being with us.
Thank you so much for having me on the show. Thanks, Priyank.
What's the mood, Ravi, according to you right now when it comes to Indian markets? We've been seeing steady trade, no major hiccups, but at the same time wondering really where the next push is going to come from.
So there's a lot of intellectual arguments going on both sides. People looking at the economy are obviously worried because one thing is clear, that this is not a rising tide yet where all the boats will go up. So you have to be discerning, but there are some bright spots available. So one should be actually more stock specific than trying to worry about the Nifty or the economy at this point of time.
But talking about change in trend, talking about what's really been moving in the last couple of days, one evident shift has been that the flows have returned. Well, it's nothing compared to what we've seen in Feb or even for that matter early March, but it is still positive is what we're seeing after almost outflows in the last few months. So why do you see this trend change? Is it the China impact? What's playing out here?
See, I mean, I cannot pinpoint, but what I can tell you is that there are enough positive trends as well. So what is the reality of today? Commodity crash, crude crash, rupee depreciation. And can these kind of trends lead to some positive flows to India? Definitely it can. On the margin, India's balance sheet is improving. India is going to spend more and more. So, I mean, there's no reason why money should go out of India at this point of time.
So let's go into this in a little bit more detail, Ravi. When you're talking about that intellectual debate and when you're talking about worrying signs from the economy, exactly what you were focusing on? Where would you like to see that difference coming in or that improvement in data?
See, just a disclaimer first, I'm a micro guy, so discussing macros, please take it with the dollops of salt. But are there enough trends or themes visible where one can play with a 3, 4, 5 year point of view? I believe there are. I mean, for example, if I were to say, India's competitiveness vis-a-vis China is improving because of rupee depreciation, yuan appreciation, because of China problems, labor availability and cost, energy and environment problems in China. Plus, for example, in textile, we have a ready base of spinners. We are the largest producer of cotton. And so we have an ecosystem which can support growth. And we should have done this 10 years back, but whatever, derai durust hai, we are catching up. So India will take away a larger share of the global textile trade, which we are at 5% right now. That is a trend which I think will stay for a while at least. So we should be looking at this kind of opportunities.
Fair. In fact, I'm going to get into themes and I'm going to discuss a couple of those factors in a minute or so. But I want to come back to that point regarding flows, because what we've also seen, when we talk about the domestic flows as well, they've been pretty strong. And as you're saying, is it the fact that there's confidence returning in regard to the fact that you're possibly hoping that the economy is expected to be a little bit better off in the next 18 to 24 months? Is that the anticipation? Just an analysis to how you see fund flows from the domestic front.
See, the domestic front, the biggest thing is the alternatives have dried up. The gold is going down. Real estate is stagnant at best. Probably it's coming down in my opinion. And a lot of money is stuck in real estate. So if there is no alternative available, definitely even if some marginal flows come in, it's big enough. Our market is going to be impacted positively in a big way if the flows increase.
And you think there's still enough on the table for retail investors to enter at what, 85, 80, 600?
See, the good part about the flows that are coming in right now, I feel are much more mature. It is not retail directly into the markets, and people are not buying because stocks went up yesterday or are going to go up tomorrow. They're more mature in their expectation. And so that's a good part. And I have absolutely no doubt this trend of money going from physical savings to financial savings and equity getting a large chunk of that is going to continue for a while.
Okay. If you've been taking a look at earnings lately, that's another indicator, of course, of what kind of pickup we're seeing. And so far, fairly along the lines of expectations, but nothing that was really, to take home
I
about.
I would correct you. I think they're disappointing. So no taking on that.
Right.
But see, that's the problem with aggregating. So if you aggregate, I mean, how does the average earnings of the Nifty 50 or Sensex 30 matter to me in my portfolio of 10 stocks? All I have to do is, are there enough stocks or enough stories available that I can make a portfolio out of? And I think that is the case. So we really do not like to focus on the aggregate unless, I mean, something crazy has happened in the market, which I don't think it has. We are not anywhere close to euphoric sentiment, whether it is central bankers or promoters or investors.
So what would an ideal portfolio be like right now if one had to go about making it? I know it's a broad question, but just in terms of basic principles by which to go across, I mean, are you focusing on a balance between certain sectors, or are you going purely stock specific? And if you are, then if you're not focusing on things like earnings, what parameters are you picking according to?
No, of course we are focusing on the earnings. It's just that we are not focusing on the aggregate earnings. For us, most of the times, how it happens, I'll tell you, is that we first stumble upon a micro opportunity, and then we figure out what macro trend it fits into. It's not like we have a very clear view of all the macro trends that are happening. But like we started talking to one textile company after the other, and everybody repeated the same sentiment. That's how you figure out, okay, this is a trend which is pretty much across the sector. So, and you can go and check. For last 4 to 8 quarters, these companies have been giving good results. So, I mean, I'm not worried about PSU banks not performing well.